What's up everybody? Welcome to the Stocks channel. My name is Corey and today we saw a relatively flat day across all of the indices. We still have a whipsawing volatile market, so first up let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today on SPY we are basically flat, going down about 0.08%. Now we did close below that critical level, which is that 20 simple moving average, which is just below 416. We closed right around 415. But we do have price action back over the 13 and the 5 EMA. Remember, this is an issue that we cannot break back over the 20 simple moving average. Typically speaking, in a bull market, you want to see price action over a positive sloping 20 simple moving average. And right now we have a flat 20 simple moving average and price action below it. We can also see intraday, we did close that gap above around 418. So there's no more gaps above and there's two gaps below. So like I always keep warning you, this is a market that you don't want to be taking way too much leverage or way too much risk in. There's still plenty of downside potential risk, and you want to define that at a gap close of about $400. There's no defined trend for the bears or the bulls, and the market does continue to whipsaw and go up and down around these ranges. So you don't want to get overly confident to the downside or the upside, because eventually we are going to see a breakout in one of the directions and we will start seeing an impulsive move. So right now, just remember, if you're not sure how to trade this market, just be patient and eventually a trend will return to this market. Right now, this is a sideways choppy market and we're still trading above that critical support level at 412. So the critical resistance is the same as last night. 416 to the upside and the critical support is 412 to the downside. That's the range you want to watch the closest for SPY. If we start breaking down below 412, we still have a ton of support below, but the risk is going to start increasing and the bearish trend and the bearish momentum is going to start picking up. Now, likewise, if the price action can break above the critical resistance level around 416, we could start trending back to the upside. You could see the 5 EMA and the 13 EMA are very close to the 20 simple moving average, so any upside price movement will start having those moving averages cross back to the bull side. If we start crossing back above 416 with the price action and the bullish trend returns, we're then going to be looking at price targets of 420, 423, and about 429. However, don't worry about those upside price targets while we're trading below the 20 simple moving average. You don't want to look too far ahead to the upside or the downside because right now we're still trapped between a sideways trading range and the market could decide to go up or down, and we don't have any clear price action that's telling us which direction yet. Anybody trying to tell you which direction this market is going to go has no idea because there's no trend and there's no defined breaks to either direction. That's just a 100% honest truth that nobody truly knows which direction this market is going to go until we see a decisive breakout in either direction. Next up is the NASDAQ 100 triple Qs, and again the same exact update as we had last night. We failed to close back above that critical resistance level at the 20 simple moving average, which is right around $330. The critical support level for the triple Qs is all the way down here at 322. So again, we're stuck between a critical range between 330 and 322. And just like I said with SPY, this market could go in either direction. So you need to wait for the price action to decisively break in either direction. Remember, if we break back down below 322, again, we have plenty of support to the downside, but the risk is increasing that these support levels are not going to hold up and we are going to start breaking down. To the upside, we need to break back above 330, and then we'll still have resistance levels at 332 and 339. So you can see with the moving averages, there's no trend in either direction, and the market is still going to chop around until we get a decisive breakout to the upside or a decisive breakout to the downside. Remember, the triple Qs also have a gap to fill at 315, and there's no gaps to the upside. So the bias or the general trend direction is going to pull to the downside very quickly if we do break down below critical support at 322. So be patient in this market and make sure you're being objective and you're following the price action very closely because the price action is going to give the first indication of which direction this market wants to go. On the Dow Jones ETF, we did close back above that 20 simple moving average, which is a bullish indication. However, we just see it on the Dow Jones and we don't yet see it on the SPY or the triple Qs. That could be a bullish indication and it could mean that the Dow is leading the way, or this could be a total fake out and a total trick before the Dow starts going down lower as well. So right now the Dow is trading above that critical resistance level, which was right around 341.7. You can see all of these moving averages are bunched up and they're basically on the same exact level, so that is going to be a strong confluence area of support. The Dow Jones also still does have a gap above right around 347.6. But remember that those gaps don't have to get filled right now and they could get filled later. And we still do have gaps to the downside as well around 331.6. So remember, we have gaps to the upside and the downside, and it's just a battle of the gaps to see which gap gets filled first. Don't make any assumptions that the downside gap has to get filled first or the upside gap has to get filled first. Just let the price action dictate that. Right now, the price action is implying that there's a better opportunity to close the upper gap. However, if we get up into that gap range and we start bouncing off and heading lower, that means that that's going to be a strong resistance level right around 345. So watch that gap to the upside very closely, and the critical support is now going to be 341.7. On a breakback down below the critical support, you're looking for another support level at 337 and the 50 EMA right around 335.5. On the Russell 2000, we went up about 0.25% today, and we're back within this wedge yet again. That now means that we'll have support right around 220, but we still have upside critical resistance at 220.8 and 222. So a very tight trading range, and if we break back down to the downside, we're looking at critical support at 215 and 209. Just like with the rest of the indices, there's no decisive trending in either direction, and the price action continues to just whipsaw around, and it's really just trading between about 222 and 215. So just like the rest of the indices, we have no decisive trend and no clear direction for the Russell 2000. On ARKK, we dropped 0.7% today, and we did close back below that resistance level at 106. We still have resistance at 106 and 109, and that 20 simple moving average is now trading at 110. Remember, ARKK is still in a bear market, so it will have downside bias, and it could still retest support right around 97. If 97 breaks down, look out below because we could be going all the way back down into the 80s. Remember that ARKK is in a bear market, so these bounces off of support going into resistance are normally going to get short sold, and it's going to continue to drive the price lower. So you need to be patient on ARKK if you're trying to be a bull to get all the way back above the 50 EMA, which is now at 116. On the VIX, we closed right at 20.1 today, and again, the VIX is still flashing warning signs. The VIX failed to close below 20 today, even though it was one of those VIX Crush Fridays, and we did not see volatility leaving the market just yet. This doesn't mean the volatility can't leave the market, but we'll know as soon as we see the VIX going below 20. While the VIX is just sitting here on 20, building up a bullish trend, getting ready to possibly launch off support, that means there's a lot of risk in this market, and we could see a huge amount of volatility coming back at the drop of a hat. So watch the VIX, because if it starts spiking off at 20, that's going to mean we're going into a deeper correction, and that will favor a bearish scenario in the stock market. If the VIX starts going lower and getting back below 18.2, that's going to signal that we're likely going to start climbing back to all-time highs. So right now in a volatile and whipsaw market, pay close attention to the VIX, and if it's above 20, you want to make sure that you're not getting overly bullish, because a VIX that's elevated does imply volatility and does imply selling pressure. So pay very close attention to the VIX and understand that it is going into a bull trend and sitting right on top of support, which does give better odds that the VIX is going to spike higher from here and not go lower. On gold, we continue to see bullish price action breaking above our price target, and it looks like we're well on our way to the next price target at 1923. Support levels are now 1876 and the 13 EMA around 1845. On silver, we continue to fail to break out, and we're still trading around that support level at 27.6. Also look for support off the 20 simple moving average at 27, and on a break back above 28, we could start running to the next price target at $29. On Bitcoin, we still see trouble in paradise, and Bitcoin is currently down over 11%, failing to break through that critical upside resistance level at 41,800. Remember, I still have downside price targets on Bitcoin at $30,000 and $27,000, and I do think that we are going to get to those levels. So be patient on Bitcoin, and remember that it is in a bear market. All of the moving averages are now stacked to the bear side, and there's going to be immense selling pressure. And remember what I told you last night, there's a lot of people trading Bitcoin right now, taking advantage of this opportunity, and they don't actually want to own Bitcoin for the long term. So they're buying and selling, and that volatility and that selling pressure is going to continue to drive it lower. So take my word for it, and don't just assume that Bitcoin has to go higher and it's going to skyrocket back to all-time highs. That's just simply not the reality of the situation, and it's going to continue to bleed out and head lower until it finds a solid base and foundation of support, and then it will be a buying opportunity to start holding for the longer term. So be patient on Bitcoin and understand that it's going to have a lot of downward pressure for many weeks to come. On Amazon stock, we dropped over 1.3% today and closed just below that support level at 32.09. That does increase the probability we're going down for the next support level at 31.38. Upside critical resistance levels are 32.50, 32.92, and the breakout level right around 33.50. On Tesla stock, we dropped just over 1% today, and we did get rejected at the resistance level I gave you at 594. Remember, on Tesla, below 557, you want to cut it loose because it's going back down to the 400s. Above 557, you can remain bullish, but just understand below this critical support level, you do want to get out, or you do want to get ready to buy much lower. Upside resistance is still going to be 594 and 633. And remember that Tesla is in a bear market, which means that it has a bearish bias and it's going lower. Until the bear market snaps and we go back into a bull trend, you don't want to be trying to hold Tesla too long. If you're trading to the long side, get in on support and get out at resistance and don't get greedy. On Apple stock, we dropped about 1.5% today and we did close back below the support level at 126. Apple did break out of the downward parallel channel to the upside, which is a bullish breakout, but we could be coming back down to retest the channel as support. So look for support around 123, 122, and if we break back down below those levels, we could be coming back down to 119. Upside resistance is going to be 126 and 128. The financial sector went up about 1% today and it's back above the 5 EMA and it's still holding on to the bullish trend. This is a bullish chart and it looks like the financial sector is not done going higher. The financial sector went up about 0.5% today and it did find resistance right at that 20 simple moving average. It's to be determined if that's going to be resistance and we're coming back down to test the 50 EMA, but you can see the industrial sector is starting to lose the bull trend. The healthcare sector was flat on the day after getting too far overextended, and remember the healthcare sector is still over the 5 EMA and still holding onto a bullish trend. The energy sector was up about 0.25% today, closing back below the 5 EMA yet again, but we're still above a positive sloping 20 simple moving average and we're still in a strong bull trend. So jumping back over to the S&P 500, you can definitely see some weakness in some of the sectors, but we still do see a lot of strength in the financial sector, the healthcare sector, and the energy sector. So there's definitely some weakness in the market, but we don't quite see that rollover and die effect in the market just yet. Remember, the VIX is still elevated and we still have a whipsaw and volatile market. And remember, this market can literally go in either direction. And I'm telling you that just so you're aware that there is nothing obvious about this market. So if it's frustrating you, it's completely normal. And don't worry, it's normal for everybody. Nobody really knows what's going to happen right now because the market is literally between two critical moments where it can break to the upside and try to form all-time highs, or it's going to break to the downside and go much lower. So if you're not sure what to do, you're better off just doing absolutely nothing so that you're not risking your hard-earned capital on something that's a very unknown event. If you're not sure how to play this volatility or how to wait for a breakout, be patient and I will keep updating you every single day until I do see something that does break out of this trend. Right now, you're better off just waiting and being patient. Also, remember on the Stocks Channel Discord, I'm giving you intraday updates and analysis to help you navigate this tricky market and stay on the right side of the trade. I'm also going to be bringing new trade ideas weekly to help you absolutely crush this market. If you're interested in joining the Stocks Channel Discord, you can find out how to join by clicking on the link below. So thanks for watching, everybody. Happy Friday. I hope you enjoy your weekend. And as always, I will see you in the next episode.